Welcome to AI Unraveled, your weekly zero-noise briefing on the real-world business impact of artificial intelligence. In this week's edition, we tackle the growing sense of financial vertigo in the AI sector. We're cutting through the hype of vibe revenue to confront the reality check delivered by McKinsey. Why is so much AI stuck in pilot, and how are CIOs moving projects from pilot to production? We'll dissect two massive financial stories: a $50 billion data center plan from Anthropic, and a warning from a big short investor that hyperscalers may be artificially boosting earnings by manipulating chip depreciation schedules. Plus, we cover the urgent security failure that proved your encrypted AI chats weren't private, and Meta's new plan to grade employees on their AI skills. And in our AIX breaking news segment, we show how AI is turning blanket alerts into block-by-block action for flash floods and vetting digital evidence to protect your newsfeed. This is the intelligence you need to make decisions, not just read headlines. But first, a message for the C-suite. Stop marketing to the masses. Start briefing the C-suite. You've seen the power of AI Unraveled. Zero noise, high-signal intelligence for the world's most critical AI builders. Now, leverage our proven methodology to own the conversation in your industry. We create tailored, proprietary podcasts designed exclusively to brief your executives and your most valuable clients. Stop wasting marketing spend on generic content. Start delivering must-listen strategic intelligence directly to the C-suite. Ready to define your domain? Secure your strategic podcast consultation now. The link is in the show notes. Back to the weekly news rundown.
Welcome to the deep dive. Today, our mission is to cut through all the noise around AI hype. We want to get really focused on what's happening on the ground operationally as of right now, mid-November 2025.
Yeah, and we've got a ton of sources here. Everything from leaked financials to, CIO roadmaps.
And the story they tell is, it's deeply contradictory.
It is. I think it's the perfect time to take this kind of snapshot because on one side you have this massive, almost unbelievable investment in infrastructure.
Right.
But on the other, there's this growing anxiety, this financial nervousness about whether all this money is actually leading to, real scalable results for the average company.
That's the tension. That's exactly what we want to tackle for you today. We're trying to separate what some VCs are calling vibe revenue, that feeling of growth, from actual tangible value.
So yeah, the goal is just to pull out the facts. What is the true operational state of AI right now? And to do that, you have to start with the money.
You have to.
The whole cost structure of the industry is driving every single decision being made.
Okay, so let's start there with that financial wobble. We're hearing CEOs from major players like DeepL and Pixar, and they're openly admitting they're worried about a bubble. They're even using that exact phrase, vibe revenue. So if the industry leaders are worried, why isn't the investment slowing down?
That is the trillion-dollar question, isn't it? They see the debate about a bubble, they see a potential correction coming, but they are still making these huge, almost faith-based bets on what they think enterprise demand is going to look like in 2026.
This is a conviction play.
It's pure conviction. We're burning cash now because we believe the payoff is just inevitable, even if the valuations today feel a little disconnected from actual profit.
And when you say huge bets, I mean, these are stunningly large. Anthropic just announced a $50 billion data center plan.
$50 billion. And a number that big immediately sends ripples through the whole ecosystem. Well, you see Samsung hiking chip prices by 60%. The semiconductor shortage is getting worse because of this pressure. So the capital you need to build the future of AI is, in turn, driving up the costs for everyone else who's trying to build and run these systems.
Which brings us to the operational Achilles heel of this whole industry, right?
Yeah.
The actual cost of running the models. It's just a massive recurring cash burn.
Exactly. And some leaked documents give us this incredible window into the relationship between OpenAI and Microsoft, especially on something called inference spend.
And let's just define that really quick. Inference spend it's not the one-time training cost.
No, it's the ongoing cash cost to run the model every single time a user asks it a question. It's a pure operational expense.
And these numbers are just wild. OpenAI paid Microsoft almost $500 million in net revenue share in 2024.
Right, $493.8 million.
And that jumped to $865.8 million in just the first 3 quarters of 2025.
But here's the other side of that coin. The part that really matters for profitability. OpenAI's inference spend, that operational cash burn, reportedly hit $8.65 billion in those same 9 months.
$8.65 billion.
So when you do the math, it suggests the startup might be spending more cash just running its models than its total revenue coming in.
So you put a $50 billion data center plan next to an $8.5 billion operational burn. You can see why that big short investor is accusing hyperscalers of, artificially boosting their earnings. The foundation feels a bit wobbly.
Extremely wobbly. The market is signaling total excitement, but the operational reality is one of just extreme capital intensity.
Okay, so let's step away from the markets and get into the corporate trenches. Let's talk about that enterprise adoption gap. The McKinsey State of AI 2025 report gives a pretty harsh reality check.
It's a very mixed bag. I mean, on the one hand, 88% of organizations say they use AI somewhere, which is a huge adoption rate.
So everyone's experimenting.
Everyone is experimenting. But that's not the problem. The problem is scaling. Only a third of those companies have actually managed to scale AI beyond a few initial pilots.
And the number that really matters to a CFO, the bottom line. What percentage of companies are seeing real financial gains? Let's say 5% or more in savings or revenue.
Just 6%.
6.
Only 6%. And the report is clear. This isn't because the tech is failing. It's because those high performers, that successful 6%, they're the ones who are fundamentally redesigning their workflows and connecting AI across the entire business.
So you can't just say, add a chatbot to your help desk and call it a day.
No. You have to re-engineer the help desk itself around the AI. You have to change the business process to fit the technology, not the other way around. If you just sprinkle an LLM on top of your existing messy systems, you're just, automating the mess.
Right. And yet you contrast that really low success rate with the optimism we see in the Wharton report. Despite only 6% seeing real gains, 88% of companies are planning to boost their AI spending next year.
The intent is absolutely there. C-suite ownership of AI strategy jumped 16 points. 60% of enterprises have already appointed a chief AI officer. So the responsibility is moving out of the IT department and into the boardroom. It's a strategic priority.
It's so much of a priority that some companies are trying to force the issue.
Yeah.
Meta, starting in 2026, will officially grade employees on their AI-driven impact.
That is a fascinating move. They're even giving them a tool, an AI performance assistant, to help them write their self-reviews for 2025 to highlight their AI wins.
Wow.
It's a controversial way to try and bridge that gap between executive intent and what employees are actually doing. They're making AI usage a core metric for success. It suggests the biggest hurdle isn't the tech, it's the culture. It's change management.
And before we get to the roadmap for success, just one quick detail that I thought was interesting. It shows how much control matters. OpenAI fixed ChatGPT's tendency to use too many M dashes.
A small but welcome victory for clarity.
You can now control it in custom instructions. It's a funny reminder that fine-grained control is critical, whether you're talking about punctuation or, factual consistency in a production agent.
Absolutely.
So speaking of production grade, if only 6% are scaling successfully, the biggest question for you listening is, how? What is the roadmap? Why do most of these projects die after the proof of concept phase?
They usually stall out for a few reasons. Governance is a big one, lack of scale, and just an unclear ROI. The CIO roadmap we looked at lays out about 8 essential steps to get from a pilot to a real enterprise product.
So let's hit the big ones, the steps that really define that successful 6%. Where do you start? What's step 1?
You have to define use cases that actually matter.
Yeah.
Focus on things you can measure. Hours saved, error rates reduced. The strongest business cases right now involve pulling intelligence from unstructured data. So think about automating claims processing or analyzing contracts, PDFs, images. If you can't quantify the benefit, don't build it.
Step 2 is about speed, building and iterating much faster.
Which means you need a visual workflow foundation. Teams need to be able to use drag-and-drop tools to design these complex flows in minutes, not months. And they need to debug in real time. If every tiny change requires a huge coding sprint, you'll never scale.
Okay, and step 3 sounds critical. The no lock-in rule. You need flexibility.
This is non-negotiable right now. Your platform has to be flexible because different LLMs are good at different things. You might use OpenAI for broad reasoning, Anthropic for safety, and maybe an open source model like Llama for cost efficiency.
And it's not just about the LLMs, right?
No, crucially, the system has to integrate with your other tools, your CRM, your ERP systems, so the AI agent can actually do things, not just summarize information.
Right, it has to be able to act.
Yeah.
And then there's user adoption. If it's hard to use, no one will.
Exactly. Adoption requires simple access points. Things like embedded assistants that live right inside the apps your employees already use every day, like Slack or Teams. It just reduces the friction so much.
So once you have agents running and handling critical data, you need to trust them. That brings us to evaluation, step 5.
This is where the rigor comes in. To maintain quality, you have to use LLM-based evaluation. This is where you essentially use another AI to grade the output of your main agent against key metrics. Is it factually consistent? Is it relevant? Does it follow company policy? This is how you stop performance from drifting over time.
And finally, the 2 steps that really turn a prototype into a product: security and governance.
Right. Security means flexible deployment, cloud, hybrid, maybe even on-prem for your most sensitive data. And governance means having total visibility. Things like granular role-based access control or RBAC, so you know who can see what, plus version history, detailed logs for every run, every error.
Without that, you're stuck.
You're stuck in the pilot phase forever. You can't scale without that discipline.
Okay, so we've got the financial anxiety on one side and the operational blueprint for the 6% on the other. Let's finish up by looking at where AI is actually cutting through all this noise and delivering real, immediate value. AI in action right now.
Public safety is a huge one. For flash flood warnings, AI is being used for something called radar-to-street nowcasting.
Okay, what's that?
It creates these super fast inundation maps. So instead of a blanket warning for a whole county, the alert shifts to a targeted block-by-block action plan. That's a measurable reduction in risk.
We also saw it being used to vet viral claims, which is so critical for newsrooms, especially around, complicated political events.
Yeah, news organizations are using these tools for forensic vetting. They're cross-checking claims against real PDFs, filtering out doctored screenshots, and using NLP to map how verified information is spreading versus rumors. The tech is basically a force multiplier for fact-checking.
And finally, fighting scams, which is getting harder because the LLMs are now good enough to create very convincing scam notices.
They are. Like that fictional $2,000 IRS buzz scam. But agencies and banks are using AI to fight back. They have NLP phishing detectors and fact rankers that actively push the real government explainers higher in search results, helping people avoid the bad links.
So that brings us full circle. The market is definitely anxious, but it's still investing at historic levels. The operational challenge is clear scaling past pilots is the huge bottleneck. It's why only 6% are seeing those big financial gains. But the blueprint for success is also clear. That 8-step roadmap is all about governance and flexibility.
And if we connect all those dots, we see AI delivering real value in these critical moments: flood warning, scam prevention. But given that only 6% of enterprises are seeing major financial returns despite that colossal infrastructure spend, despite that $8.65 billion in operational inference costs,
It just raises a massive economic question.
it really does. What fundamental shift in the business model, or maybe the pricing structure, has to happen for the industry to move past the anxiety of vibe revenue and really commit to the operational discipline of a true AI operating system?
That's the question for you to think about as you plan your next move. Thanks for joining us for this deep dive.
That's it for this week's AI Unraveled rundown. The key takeaway? The market has officially shifted from the giddy phase of vibe revenue to the harsh scrutiny of execution, security, and true financial metrics. Between Michael Burry's warning on hyperscaler profits, the massive Anthropic infrastructure investment, and the stark reality check on getting pilots into production, every leader must look past the press releases and into the balance sheets and operational models. We'll continue to track the collision of capital and reality in the coming weeks. If you value the strategic insights we provide, please take a moment right now to like and subscribe to AI Unraveled on your preferred podcast platform. It truly helps us cut through the noise. And for executives who recognize that generic content is no longer working, if you're ready to stop broadcasting and start briefing your most valuable stakeholders, the link to secure your strategic podcast consultation is waiting for you in the show notes. Until next time, keep unraveling the future of AI.